Nigeria's central bank holds interest rates at 27.5%. Smart patience or risky gamble on price stability? Good morning and welcome to another power-packed episode of Business Week. This week, Trump cranks up his trade war, slapping 25% tariffs on European cars, chips and pharmaceuticals, while OPEC Plus sticks to its April oil supply hike, keeping energy markets on edge. In South Africa, the budget is in limbo, and in tech, China's DeepSeek is rewriting AI rules, building models on a shoestring budget while facing bans over data privacy concerns. And back here in Nigeria, the National Bureau of Statistics has rebased inflation to 24.4%, while the CBN holds rates, banking on cooling price pressures. But is this a bold strategy or just buying time? And in today's deep dive, I sit down with Special Advisor to Nigeria's President on Energy, Oluverhaihen, to unpack Nigeria's oil and gas sector reforms, upstream competitiveness, and the future of energy. Did you miss the big business stories of the week? Don't worry, I'm here to help you catch up as always. I'm Rolake Akinkubu-Filani. As always, we'll start with a look at global commodity prices, starting, of course, with Brent crude oil, which was up week on week by 0.33%. Oil prices are edging up higher. OPEC, incidentally, and I'll be talking about that in a bit, has said it is sticking to its planned phased increase in production. We've also seen U.S. President Trump announce that it's going to increase the country's strategic reserves, so get more oil reserves into the SPR, which it uses for strategic reasons. That's also impacted oil prices and kept them pretty high in the market. WTI following suit. Natural gas was up, but RBOB gasoline was down by 1.92%. Let's take a look at equities. Scoot over, of course, first to Nigeria's stock market. The all share index was up week on week Friday by 0.41%, ending at 108,497.4 points. Number of deals week on week did slump, but still pretty robust at over 13,000 there. Volume of deals shares traded 315.7 million shares, value of 8.3 billion naira. And of course, market capitalization was up week on week by 0.3%, ending at 67.6 trillion naira. Let's take a look at African stocks now. It was a green wash through the stock markets across the continent. First, of course, in Johannesburg, the stock market JSE was up to 88.9 thousand points, ending the week up by 0.2. Accra, Ghana was up by 3.97%. Thanks to mining stocks, actually, a big gold mining stock there saw a huge rally. And Nairobi was also up by 1.34%, as was Casablanca in Morocco, up by 2.38%. Let's take a look at Europe. Well, interesting here. Euro Stock 600 was up week on week by 0.14%, and it had quite a good run throughout the course of the week. European ministers, defense ministers have been discussing beefing up defense efforts across Europe. Of course, NATO, a big play. Companies like BAE Systems, of course, part of the defense index within European stock markets, are helping to pull the market up, despite not such a great end to the week for some of the individual indices, such as the FTSE in London, which was down by 0.81% week on week. Now, let's take a look at my top picks from around the world. Starting here with Nigeria, the two big economic stories this week. First of all, monetary policy. The CBN held interest rates, its monetary policy rate, which is its benchmark rate, held it at 27.5%, a hold. Many analysts did predict a hold. Signs of inflation easing, but this really suggests that the CBN probably recognized the limitations and constraints of monetary policy as a tool for curbing inflation. Of course, that hold, you could think of it in two ways. First, the CBN still wants to see the effects of past MPR rate hikes, which we saw last year. We had a total of 175 basis points hikes in rates last year. But this year, it has decided to hold at its first MPC seating. The second point here is that we know that inflation in Nigeria is increasingly a cost-push type of inflation. So supply side, food security, disruptions in value chain, transportation infrastructure, all of those things have an impact on the prices of goods and services. And food is still probably the most problematic line item in the inflation makeup. Year on year, January year on year, food inflation was at about 26%. And we'll come to that, which is where I'm going now. The NBS, the National Bureau of Statistics, has rebased Nigeria's inflation, reviewing its CPI, Consumer Price Index basket, and changing the base year to 2024, which has meant inflation trended downward in January by 24.4%. But it's important to mention that this is a technical adjustment, not an indication that in reality inflation is down. Now, we're seeing the rate of growth decelerate, but I think it's worth pointing out that this is an economic exercise. It's a technical exercise. So we've gone from being at 34.8% to 24.4%. But we should not rest on our laurels. Inflation is still a big risk in the Nigerian economy. Hence, my first headline here about the CBN deciding not to cut but to hold, because it still wants to see the lag effects of its previous monetary policy hikes and how far that will go in easing the inflation picture in the country. Interesting times for Nigeria. South Africa's budget is on hold. A big dispute here between the Democratic Alliance and the African National Congress, the ANC, of course, coalition government post the 2024 elections. And the real issue here is around the planned VAT increase. The ANC side of the coalition wants to increase VAT by 2% to 17%, and the Democratic Alliance and some factions within the ANC are saying no, absolutely not. And this has deferred the passing of the budget. Now, this is the first time since the end of apartheid that the South African budget has been delayed. Just goes to highlight the delicate nature of the coalition government that was formed, the Government of National Unity, GNU, post the 2024 elections. Now, the South African government, the ANC primarily, argues that that increase in VAT is crucial for spending on social infrastructure like health and education. And of course, the other side of the aisle is arguing that this will have an inordinate impact on businesses and other aspects of the economy. So hopefully that delay doesn't continue for too long, but it's an interesting story there for a budget. Just goes to show that consensus politics is difficult to achieve in any territory around the world. Let's take a look at OPEC Plus. Now, Russia's deputy prime minister has come out to say that OPEC plans to stick to its production hike increase strategy, which it had introduced last year, and it had taken off around 500,000 barrels a day from the market. Now that plan to start increasing production incrementally from April sticks. It is not planning to fast track that. It's not planning to delay it. All markets are still reading what this means. It's also concerned about overheating the global economy by causing prices to rise up further. You would have thought that if you're an oil exporter, like most OPEC and OPEC Plus countries, obviously our high prices would be pretty good for you. But of course, fears around global demand if prices go way too high. So OPEC sticking to its strategy there, according to Russia's deputy prime minister. Russia, of course, a member of OPEC Plus. And finally, Trump has announced a 25% tariff on European cars, semiconductors, chips, and pharmaceuticals. Well, the Trump tariff train continues. This time, it's faced to Europe. And of course, a couple of weeks back, China was in the eye of the storm. The Europeans have reacted very negatively here, and I guess understandably so. Europe exports a lot of vehicles and cars and transportation parts and equipment to the US market. So manufacturers like Mercedes-Benz, BMW have obviously complained and are worried about the impact on revenues. In fact, the Germans have said this move by Trump is provocative. And it is likely that European Union will actually go to the WTO, as China has done, as many other countries have done when Trump has made this move. Of course, this has been going on since 2018 when Trump first had it out for China insofar as tariffs are concerned. We'll see how that evolves. Of course, the tariff and trade wars continue, and stories that we like here on the rise because it impacts the rest of the world. That's it for my top picks. And now for some other stories from around the world. First, tech. According to prominent IT executives, the Chinese artificial intelligence lab, DeepSeek, has demonstrated tech advancements that indicate the game is on in terms of the US-Sino battle on artificial intelligence. Leaders of a number of significant tech businesses stated in a series of interviews on France's Artificial Intelligence Accent Summit stage that DeepSeek's rise shows that China is a significant player in AI innovation. In a technical paper that was released last month, DeepSeek shocked the world's markets by claiming that one of its new AI models was developed for less than $6 million in total training costs. This is significantly less than the billions and billions of dollars being spent by big tech companies and Western AI labs like OpenAI and Anthropic. Well, still on OpenAI and DeepSeek and AI and all that, South Korea's data protection authorities announced that DeepSeek had been banned from new downloads in the nation after DeepSeek admitted to disregarding several of the agency's guidelines for safeguarding personal information. Now, the Personal Information Protection Commission, PIPC, stated at a media briefing that the app's service will be restored if enhancements are made in compliance with the nation's privacy legislation. The agency stated that although DeepSeek's web services are still available in the nation, the newly implemented mechanism attempts to prevent new downloads of the program. At a minimum valuation of $44 billion, Elon Musk's X is in negotiations to raise capital from investors. According to those acquainted with the situation, the funds will be used for projects like payments and video products and will assist in reducing the social media company's massive debt load. If successful, the money would also mark a significant turnaround for X following the exodus of users and advertisers brought on by Musk's purchase and redesign. Musk purchased the social network, of course, more than 2 years ago when it was still known as Twitter, and a $44 billion valuation would be comparable. Intel shares rallied 16.1% on Tuesday following a Wall Street Journal report that both Broadcom and Taiwan Semiconductor Manufacturing are potentially weighing bids that could result in splitting the embattled chip maker. The stock closed at $27.39 and notched its best day since March 2020. The Wall Street Journal reported that Broadcom may consider a play for the company's chip design and marketing segment, citing people familiar with the matter, while TSMC is interested in a stake or complete control of Intel's factories. The companies have not filed bids and talks are largely informal. G20 foreign ministers are meeting in South Africa, but the absence of U.S. Secretary of State Marco Rubio highlights growing global divisions. The talks come as tensions rise over the Ukraine war, trade disputes, and South Africa's diplomatic rift with Washington. The U.S. skipped the meeting after cutting aid to South Africa over land reform policies and its alleged genocide case against Israel. With Trump shifting U.S. policy on Ukraine, China is seizing the moment to expand its influence, particularly in Europe and the global South. Analysts say this G20 summit could further reshape global alliances. And still on South Africa, South Africa's official unemployment rate fell to 31.9% in the final quarter of 2024, down from 32.1%, marking a second consecutive quarterly decline. Job gains in the finance and manufacturing sectors helped drive the improvement, according to Statistics South Africa. Despite the slight drop, the broader expanded unemployment rate, which includes those who have given up looking for work, remained unchanged at 41.9%. Black women and youth continue to face the highest joblessness rates. The coalition government has pledged to make job creation a priority, but experts say deeper structural challenges remains. And that's it for our top stories from around the world.